Bitcoin, sadly, is too energy efficient to allow for information transmission at global scale. It's just not efficient enough. It consumes way too many BTUs, as it were. Gold requires zero energy to maintain because Mother Nature simply created it. It's non-reactive. It has essentially zero entropy.
In today's video, Head of Treasury at Tally Money John Butler tells us about his recent price prediction on gold. He believes that as the world transitions to a gold standard monetary system, the price of gold will skyrocket to $50,000 per ounce. Butler shares his opinion about Bitcoin, high inflation rates, the strengthening dollar, and Federal Reserve Chairman Jerome Powell's hawkish speech at the Jackson Hole Symposium. Before listening to him, please ensure to smash the like button and subscribe to the channel. Let's dive into his last interview now.
The US economy is therefore better able to absorb higher interest rates without causing serious economic damage. I fundamentally disagree with that. And I know that's a controversial view, but I think the dollar is overvalued here and has a lot of exposure to the downside when we pass through this hawkish moment, as we discussed a moment ago.
Will the Fed remain the most hawkish central bank for long?
No, I don't think it will. And as I did suggest, I think these perceptions about the relative superiority and flexibility of the US economy, first of all, I believe they're already basically priced in. And I also think they're simply overblown. That is, let's keep in mind, the US has gone through tremendous structural changes over the past couple of decades. It's got a far higher average tax rate than it used to have. It's got far higher household, corporate, and public sector debt to GDP than it used to have. It's got a far more expensive and difficult regulatory burden to comply with than it used to have. And this idea that the US is fundamentally a more flexible, dynamic economy than others around the world it's increasingly hard to make that case today. And I believe that will begin to show up in the data that the US economy is unable to last with strength if interest rates continue to rise, and the Fed will blink sooner than most people believe.
Do you think they could pivot, potentially stop raising interest rates, maybe even cut interest rates? I've heard that position before from some people.
I think the Fed is good for one more sizable rate increase. And I believe they're going to follow through with that because it is a credibility restoration exercise. I believe they want to build that credibility. And let's face it, even though you've had a very modest amount of stock market weakness so far this year, it's the order of magnitude is very, very small. Where there's more concern is in credit markets. And the Fed is also very concerned about credit markets. So that is something I'm sure they're watching. But nevertheless, I think they are good for one more large increase. After that, I think it's very likely they tone down the rhetoric almost immediately and see what happens. Step back a bit. And then I think what you'll find is that the general global economic downturn, which of course includes the US, which is technically already in recession, I believe that the numbers will start to force the Fed's hand towards a more explicit acknowledgement that the hiking cycle is probably over and that inflation is going to trend downwards of its own accord back to something in the low single digits, say on a 1 to 2 year time horizon. That's where I think they're going to end up. That will weaken the dollar, that will strengthen the gold price, and start kicking off, the general sort of picture that I have going forward. Look, I don't think the dollar's going away either. I just believe that the relatively unbalanced monetary system, or unipolar monetary system, if you want to call it that, which has prevailed post-Bretton Woods, notwithstanding the formal ending of gold backing for US dollar reserves. I'm just saying that has a sell-by date, and I don't believe it's compatible with a general shift of economic and for that matter, other forms of power around the world towards a more multipolar structure. And indeed, if you look at history, in my book, my book looks at a lot of history.
Yes.
If you look at history, unipolar monetary systems may be normal. Reserve currency-based systems around a single currency may be normal. But historically, with the one exception of the unbacked US dollar, they have all been backed by a very, very specific weight measured amount of gold and or silver that is fundamentally different from a currency issued by a central bank without any restraint or constraint imposed on it by the structure of the international monetary system. Nature restricts a gold standard type system, even if there's a single issuer of the dominant coinage. Mother Nature does that because she determines how much gold there is around, okay? Whereas today, there is no natural constraint on money creation. In my opinion, when you're in a unipolar world, yes, the monetary hegemon can impose its monetary preferences on the world at large. We've been experiencing that for decades, ever since the 1970s. But that is a historical anomaly, and I believe it is fundamentally incompatible with a multipolar world where countries will demand a more equitable distribution of the power of money creation. And indeed, and this is the real crux of the argument in my book, this is where it comes together. The classical gold standard itself arose out of a lot of monetary mayhem. There were a lot of disputes about exactly how the international monetary system should work. And indeed, a gold standard can be best understood as a system or a structure that arises out of a failure to agree precisely how money should be created. And so if we're going back to that sort of level of dispute, competition, disagreement at the international monetary level, gold solves for the game theoretic monetary equilibrium for a multipolar world that is nevertheless hugely dependent on international trade. What I'm saying is that I believe that whole process catalyzes itself into a new gold-backed global monetary system.
All right.
But in theory, what that means is it almost gets to the point where it doesn't matter which currency you're invoicing in, because if they're all gold-backed, then in a way, they're all going to be stable relative to each other, and you get much more certainty at the international level regarding the stability of your assets, of your cash flows, of your trade, regardless of whether it happens to specifically be yuan denominated, dollar denominated, yen denominated, euro denominated, so on and so forth. So in my opinion, kind of all of them, right? I believe all of them at that point competing on a level playing field will be used. And indeed, when it comes to bilateral trade, presumably the dominant currencies will be the ones that are issued by those two countries engaging in that bilateral trade. When you look at the scale of exports from countries like China and Germany, or the euro area more generally, you can make a strong case that the dollar is not going to be any more dominant in invoicing if you move to that sort of system than either the euro or the Chinese yuan. I believe it is, and it goes back to what I mentioned very early on. The fact is that nobody can print gold. Nobody can create gold. You only can come up with more gold either by exporting more than you import, and then, of course, you accumulate gold, or, of course, you find a way to dig more out of the ground. But that's expensive, takes time and money, and you only do it when the price of gold is sufficiently high to make that economically worthwhile. And so the supply of gold becomes kind of a self-regulating system vis-a-vis the demand for gold. And that, to me, is a much, much better basis for international trade and growth than the system we currently have, which is one where nobody can really agree or know. It's nice to know that Mother Nature determines how much gold is available, as opposed to the country across the way with which you do trade, but you don't necessarily completely trust to honor its commitments. Maybe indeed you'll fall prey to economic sanctions at some point. Do you really want to be holding assets denominated in that country's currency, whereas gold is no national asset in that sense? It belongs to the planet. And it was created by Mother Earth. So to me, it kind of solves this problem of mistrust, distrust, competition, and yet also cooperation at the international level. It facilitates all the good things about international trade while mitigating the potential bad things about monetary manipulation. The transition period will have to reprice gold to a level which allows it to be valued vis-a-vis the global asset base and global trade volumes in a way that implies equilibrium. What I mean by that is that today the gold price is too low to allow markets to clear because assets are overvalued vis-a-vis gold, and you need to rebalance the global economy such that you don't have these imbalances, which are huge, right, as a result of all the dollar accumulation as reserves through the decades of Bretton Woods. So the gold price needs to rise by an order of magnitude in order to allow that system to work. So you go through this phase transition when the price of gold has to rise by an order of magnitude. In my book, I go through some calculations what that order of magnitude would be. And indeed, they're based on calculations that have been made before by other economists, including under Bretton Woods. I mean, would you believe, we take it for granted today. We think, oh, gee, Bretton Woods is a stable system. It just worked. Nobody questioned it. That's not true. There was lots of debate and discussion during already the 1950s, but in particular the 1960s, that the U.S. money and credit supply was growing too quickly to be credibly backed by gold anymore and to allow Bretton Woods to function. And so there was already this dispute going on that gold was going to have to be revalued at some point. And indeed, gold was revalued before Bretton Woods broke down completely. They tried to go through a revaluation process, but it just wasn't enough. It didn't properly rebalance international trade. And it all blew up in the end when the US basically lost patience with the rest of the world. So, that's how it happened then. But back then, the world was still very unipolar in political, economic, and military terms. It's far less so today. So I think today, the reevaluation that gold would have to go through to imply a stable international monetary equilibrium is huge. And by implication, according to my calculations, you're talking something in the region of about $50,000 per ounce being a reasonable market clearing price for gold if you fully go back to a gold-backed international monetary system.
Can Bitcoin replace gold as a standard of currency?
I regard Bitcoin as a fascinating monetary experiment, and there's really much to admire about that. I've been watching it from very early days, and have truly been fascinated by it, and I truly respect the effort behind it and the effort to develop an ecosystem around it. But as that development has taken place, it has become evident to me that Bitcoin, while very elegant in its maths, is less efficient than is generally assumed as a monetary base. Now, I stress the word base. I'll elaborate on that in a moment. Basically, the issue here is that information theory, which was pioneered by Claude Shannon and others already back in the 1940s, and is the basis today of how internet protocols work with respect to sending bits of information around, and all computer storage, zeros and ones, basically. It has to do with energy. Well, how much energy does it take to switch from a 0 to a 1 or back again, or transfer that information from point A to point B? The maths behind that is very, very, it's fascinating and very complex, but it reduces to this. Bitcoin, sadly, is too energy efficient to allow for information transmission at global scale. It's just not efficient enough. It consumes way too many BTUs, as it were. Now, people are trying to solve that problem and make it more efficient by layering on top. They're stacking on top of it things like the Lightning Network, say, or Taproot, and these sorts of protocols and everything else. Well, that sounds nice on paper, but understand that undermines one of the original selling points of Bitcoin, was that it was fully decentralized. But if fully decentralized, it's too inefficient. So, okay, centralize it. But then you're creating points of failure. You're creating points of potential regulation and interference and potential points of fraud. And so a lot of the benefits of Bitcoin are lost as you try to come to terms with its energy inefficiency. Now, why does that make gold somehow better? Well, guess what? As a monetary base layer Gold requires zero energy to maintain because Mother Nature simply created it. It's non-reactive. It has essentially zero entropy, and it cannot be destroyed. Okay? I mean, it can be dispersed, or it can be redispersed, but it can't really be destroyed in a physical sense. Bitcoin sadly lacks all of those immutable properties. And so as a monetary base, gold is superior. And therefore, if gold's the superior base, that's what you want to stack on top of. Go ahead and take a technology like Bitcoin, back it with gold, and build your monetary system on that. Hey, more power to you. I think it would be a great idea. But to have Bitcoin itself be the monetary base, hugely inefficient. I don't think that could possibly work. And people would realize that. It would just become too expensive and it wouldn't work. Look, I'm a huge fan of technology. Technology is behind all human progress, okay? I'm not going to sit here and say that we should go back to the coinage of the 19th century. Absolutely not. Mm-hmm. But why not take advantage of whatever latest, greatest information technology is out there and use that to transmit title to gold from one place to another in exchange for goods and services, or to purchase assets or whatever it is? Why not do that in the most efficient information theory way possible, which hopefully is also secure and all of that, but back it by gold to remove the entropy of the base layer? That to me is the holy grail. And indeed, I'm very confident someday we're going to get there. Well, look, the way the system is currently being run, it has to happen by definition. It's the only way you can keep the banking system afloat. That's the problem we have here, right? We're in this terminal phase. We've crossed the Rubicon. We've crossed the event horizon. There is no way to keep the current system functioning without continuing to inflate. Inflation is endemic now. There's no way to come back out of this. And therefore, you either inflate to oblivion or you eventually reset the system. I think there's a lot of acceptance now that one of those two has to happen. Of course, if you're if you're a policymaker, you're an economic official and you're in charge, you prefer a reset. That's easier said than done. But all the discussion about CBDCs, central bank digital currencies, all the discussion about, potentially creating a new currency basket, be it for the BRICS, be it for the world at large. All this discussion, which is very open and active now, about various forms of monetary restructuring, I believe all of that is based on concerns that we actually have to reset the system in order to not just inflate into oblivion. They won't say that that's the choice we're making because it sounds kind of embarrassing to suggest, gee, our policies have led to this awful dilemma. But that's where we are, in my opinion.